Lunch Byte. You were a frequent guest on our predecessor to this, which we called Global Law and Business. This is a much more free-flowing, open discussion. We're keeping it to 15 minutes. And today we are going to talk about the Corporate Transparency Act, which is everyone's favorite topic.
I'm so excited.
So please introduce yourself to folks who don't know you. You and I have worked together for years now. A very good complementary partnership with a lot of international clients, and Corporate Transparency Act is certainly applicable to all of them, plus basically all of our clients. So please introduce yourself for everyone, and then we'll jump in and hit some of these questions we've got.
Absolutely. So I'm Michael Criddle. I'm a tax partner with Eide Bailly in Utah. I have been doing international tax for 25 years, and it's something I'm passionate about, and I'm excited to have a guest appearance on the Legal Lunch Byte.
You're the only lawyer, or you're the only accountant I know who has put passion and tax in the same sentence, Mike. Ever.
Excellent.
It is a great combination of traits. So let's talk about the Corporate Transparency Act. Why do we even have this act?
Yeah, it's interesting. For years, the US has kind of resisted the pressure from Europe specifically to enhance and strengthen something called KYC, or Know Your Clients. Um, and who fundamentally is the beneficial owner of corporate structures. They want us to understand and know who is behind all of these corporate structures and businesses being set up in the US. And so a law was passed in 2021 that finally created this new reporting regime so that companies set up in the US would have to report the ultimate owners of their businesses, because that's fundamentally what the government wants to know. Who is pulling the strings behind the screen?
Well,
So that's what this does.
it's interesting to me because I always felt like, especially as I dove into the crypto world the last few years, I always assumed that the US was the one beating the drum. And maybe that is the case because there's so many, everyone's tied to the US financial system. Or if you want to be, then the US can bring the hammer down and say, you country, we are blacklisting you or graylisting you because you don't comply with our, you are not making sure that disreputable people are using our financial system or having access to the U.S. financial markets. So it is very interesting to me coming in, I guess, as an outsider. I always feel like an outsider in every industry because a lot of times I'm learning as I go. It's just interesting that the U.S. is now finally getting compliant with what I assumed it was requiring of all the other established countries.
Absolutely. Yeah, the US is a little bit of a do what we say, don't necessarily do what we do.
Makes perfect sense. So fundamentally, tell me, I know this a bit, but I like it from your perspective because you and I see the same thing and we see it from different angles, which is absolutely good to do together. So who does this ultimately apply to? Is it everyone? Is it some? Is it only foreign companies? Who should be concerned about this?
Yeah, so this is very broad. Now, it specifically targets US corporations and US LLCs. So it's businesses that are structured as corporations and LLCs. But the vast majority of businesses, even ones that are taxed as partnerships or S corps or something else, disregarded entities, are legally structured as LLCs. So any entity structured as an LLC or a corporation in the United States is subject to these reporting rules, with some exceptions. There's 26 of them, I think, but there's a number of exceptions, but they're very narrowly defined, and so you really need, a professional to kind of help you navigate whether or not you qualify for one of these exceptions.
Yeah, and I consider those kind of the companies and entities that are already beholden to public reporting in some way. They're already,
Exactly.
for instance, banks, financial companies, listed companies, they already have significant government oversight. So this is kind of bringing a broad net to everyone else.
Agreed. Yeah. And there's some pretty strict deadlines, Jonathan. So, for companies that and this covers even companies that have been in existence for 20 years, 10 years, because any LLC or US corporation that was in existence before January 1st, 2024 still has to do this beneficial ownership reporting. They just have until January 1st, 2025 to do the reporting. It's particularly onerous for new companies, though, because any new companies established in 2024 have 90 days to comply with this foreign or this beneficial ownership reporting. And any companies established after January 1st, 2025, so in the 2025 calendar year, will only have 30 days to comply with the beneficial ownership reporting.
I know as you and I were talking about this earlier this week, there are companies that don't even get a tax ID number in 30 days from the IRS. If there's
Yeah.
some hang up, if they fax in the form or it doesn't go through, it's entirely possible they don't have a tax ID number at the point of time where they have to register with FinCEN.
That's absolutely the case, and it's going to actually necessitate, in my mind, that there's going to be, some advance work done from a beneficial ownership reporting perspective before the company even goes live.
Yeah, I know we have it's a PDF, a multi-page PDF that we send to all of our international clients and domestic clients, asking them for not all the beneficial ownership reporting information, but most of it. And so we're going to have to cast a wider net as we've been forming entities the last 6 weeks since the new year. It's something that I've had to think about consciously, and how are we going to modify our forms to make sure that it's easy for us, that the administrative burden is not on me, it's still on our clients to provide us with the information, because as you know, it's difficult getting information from US companies, but international companies, I know you and I know, I mean,
Yeah,
it's
it's even
it can be
harder.
sketchy, unreliable. You're always kind of wondering, are you getting all the right information? Have you thought a little bit about how to is Eide Bailly taking this on as a responsibility, or are you pushing this down to the clients to make sure they comply?
Yeah, so a lot of accounting firms, including Eide Bailly, in discussions with our insurance, practice insurance, have determined that this is just a risk we can't take on. It's the other element is the AICPA, which is the governing body of accountants, has come out and said there's some question as to whether or not this is providing legal advice. And in the United States, accountants cannot provide legal advice. They don't let me play in Jonathan's sandbox, sadly.
It's not a
And
pretty place
so,
anyway. You don't want to be here.
yeah, so we have to be really careful that we don't take on this responsibility. But we absolutely can and will help our clients comply with it. But for complex ownership structures, it can take some effort to figure out who ultimately is the beneficial owner, who either owns or controls the company.
And that is an interesting nuance that maybe a lot of people don't think about. The immediate thought is, okay, who are the beneficial owners? What are the threshold percentages for ownership that we have to keep an eye on? How far up the ownership chain do you have to go if you have a chain of entities? And ultimately, who is in control? Which I think this is an interesting concept that maps over pretty well to CFIUS. That's the Committee on Foreign Investment in the U.S. So anytime a foreign company, there are some safe harbor countries that these companies could come from, but basically anytime a foreign company is looking at acquiring a controlling interest in a U.S. company, they have to do at least a CFIUS analysis, if not a CFIUS review, and that's a body that is it's a conglomerate made up of kind of the who's who of the executive branches in determining, mostly for national security purposes, who we want to buy or who we're okay with buying existing companies. So it's analogous, not identical overlap here, a bit of a Venn diagram in terms of who the CFIUS net would bring in. But I've been through some CFIUS actions, and that beneficial ownership reporting goes all the way down to every individual, no matter what. And so it's even a deeper, more penetrating look at the entity that would be acquiring a controlling interest in a U.S. entity as compared to the Corporate Transparency Act.
Yeah, and really the Corporate Transparency Act is also concerned about individuals. So it's individuals that control underlying corporations or individuals that you know, control U.S. entities, both from a domestic and international perspective. It just can be trickier from an international perspective, tracing through complex structures to determine who the ultimate owners are, and then obtaining the necessary documentation from those owners in order to comply with the beneficial ownership reporting.
You know,
'Cause
in my
it's not
world,
as
sorry, go ahead.
I was just gonna say, it's not as simple as just typing in their name. You have to prove who they are.
Right, and that means passport or other U.S. government photo ID with a unique identifying number that
Yeah,
the U.S. government can then put into the database. Knowing that not everyone has a passport.
right.
So I think it's interesting, the sheer volume. I know I don't. I feel like IRS is overwhelmed. I got to imagine the Treasury is going to be overwhelmed with this, especially these first couple of years. I can't imagine that they're going to be able to stay on top of the. I don't know how many millions of companies are going to be reporting this year, and certainly next year when all the pre 2024 entities have to make their filings. It's a little bit mind-boggling, and I know
It's
you
gonna
and I
be
are a little bit we're a little
overwhelmed.
bit skeptical on whether or not that 30-day deadline is going to be enforced or enforceable in 2025 and beyond.
No, I agree. And really, this is going to be new for a lot of people because disregarded entities, so LLCs that are set up with a single owner and are disregarded for tax purposes, have up to this point had no, like, reporting requirements. They just kind of exist for legal purposes. But those entities will have to do beneficial ownership reporting with FinCEN, and that's going to be new and unique for them because they won't be those kind of LLCs won't be accustomed to disclosing this kind of information.
Yeah, I'm thinking about all the tradespeople who are solo. I mean, the U.S. has such a huge number of small and medium-sized enterprises.
Yeah,
It's going to bring a lot of companies into that net for sure. A lot of owners that aren't ready for it, aren't thinking about it.
yeah, and most of them are LLCs, limited liability companies in the U.S., which are subject to this reporting.
Hmm. Hmm.
And then trusts are another interesting piece. A lot
You
of
did only mention
LLCs are
corporations and
owned by
LLCs,
trusts.
right?
Yeah.
Yeah, sorry, talk over you. You said LLCs and corporations earlier. So how do the trusts fit in?
Well, um, trust can be unique because they have beneficial owners of trusts fundamentally, right? You have beneficiaries, you have grantors, you have settlers. And so the US is trying to look through, or these rules are trying to look through trusts at the ultimate owners. But the existence of trusts in your ownership structure can make determining who's the beneficial owner, who has control, much more challenging from a beneficial ownership reporting perspective.
What is the largest string of entities that you have ever seen in your practice?
Oh,
How many? How
probably
many?
about 15 or 20. I don't know.
That is disgusting. That's-
It is disgusting. It's true. And the other thing to keep in mind is some trusts that are categorized as business trusts or treated as corporations could actually be reportable entities under the Beneficial Ownership or Corporate Transparency Act rules, even though they're not technically an LLC or a corporation. So it's an interesting nuance that
yeah.
folks are going to have to kind of work through.
In the back of my head, the vast majority of entities that I form are LLCs and corporations. But you're right that as the lawyer, I'm thinking I've got to check every entity against that list and see if it fits the criteria for this,
Yeah.
especially as we're forming them. So, Mike, when do you and I go to jail for this? That's the big question, right? Who goes to
Well,
jail, and how much is it going to cost and to get out of jail?
Well, we really don't know, right? They talk about $10,000 penalties for failure to file. Does that mean that they assess them automatically after the 30 days has lapsed? You just get a letter in the mail saying you didn't report your entity within 30 days. Here's a $10,000 penalty.
Hmm.
Is it more targeted than that? Meaning, do they just have this penalty in their back pocket and they pull it out when they see a bad actor? We
Right.
just don't know. It's so new. It will be very interesting to see how FinCEN enforces this penalty. If it's anything like FBARs, which is foreign bank account reporting, which is also under FinCEN, it's more of a when they come across a bad actor, they have this penalty in their back pocket that they can assess, but it isn't automatically assessed for late filing or failure to file
Yeah.
unless there's a compelling reason to assess it.
I think the key word that I saw is willful. So all
Yeah.
of it, like, you're right, it's going after bad actors. And I did see a 90-day grace period. In addition, you have, like, for instance, this year we have 90 days to file, and then 90 days after notice as a grace period. So I think as long as, and it'll be interesting to see how that's applied, if it's equally applied, or how that works. But as long as there's no, um, we're not willfully, none of us as the filers of my law firm, the filers helping companies do this, or the companies themselves, or someone who provides me bad information. There's a lot of seeing willfully throughout the regs and the Q&As is a little bit of
Yeah.
comfort for me. Although, like you said, it'll be, time will tell how far this goes.
Agreed. Yeah. It's new.
Okay,
It's
so we're,
exciting.
we're at our 15 minutes, Mike. You have any parting thoughts before we let everyone go? It's gone quickly, and always appreciate a chance to catch up with you.
Well, just this is another example of casting a wide net so that they can weed out a few bad actors. And unfortunately, it's just something we have to comply with. So make sure you're on top of it. Make sure you're talking to your trusted business advisors, your lawyers and accountants and whoever, to help you navigate this, because it could be a real trap for the unwary if you're not careful.
Agreed. So next week we will be talking about internet fraud. A couple of my colleagues who specialize in that will be probably sharing some gory details about some of the bad situations they've seen of dealing with internet fraud. It usually never turns out well, but it's good for everyone to be aware of what's going on, especially now that crypto is on the rise and everyone thinks their magic money has turned into more magic money.
Yeah.
Thanks, Mike. It's great to chat with you.
It's great to chat with you too, Jonathan. That sounds like a really interesting topic. I'll
Always.
tune in.